And the federal Liberals will also have some tax changes in store for us when they take office next month. And to tell us what's coming our way, I'm joined by Wiley. She's an accountant based right here in our city, and she's also our CBC Calgary Money columnist. So very timely. Let's get right to it. Brass tacks. What should we expect in terms of tax changes?
Okay, first on the chopping block and out of the gate, one of the items on his agenda is to get rid of the income splitting. So
for families.
For families,
yeah.
Right. But the tax increase on those earning more than $200,000, we're going to see an increase from 29% up to 33% on the federal side. But then with the proposals for the Alberta government sitting at 11%, we're looking at a combined rate for some of those high income earners of in excess of 40% for Alberta, and as high as 50% for other Canadians.
And you mentioned income splitting for families. How much is that going to cost?
That tax credit was $2,000 if you were able to take advantage of that last year. That was shifting some income from the higher income spouse down to the lower. That means $2,000 to your bottom line.
Mm-hmm. Yeah. And what about changes to RRSPs or TFSAs?
So for the RRSPs, there is some good news. Perhaps there's going to be more availability to withdraw money for reasons other than first-time home buyers. So if you move to a new city to take on a new job, which might be happening a lot in this economy,
yeah.
They're looking at proposals for that, or a change in marital status, changes in to your home to be able to take in elders and family members that need your help.
More flexibility.
More flexibility, yeah. For the TFSA, this one's been widely talked about.
Yeah.
Of course, the increase to the $10,000 contribution that happened earlier this year, they're looking to roll that back to the $5,500. So hopefully that's not going to take effect till next year, because that could be a little bit of a mess if they try to do it this year. But I don't suspect.
Too late in the game.
I think so, yeah.
Seniors watching this closely.
Seniors, yes. So there was a proposal for the OAS to be deferred and not be able to get that until you're 67. So they're putting that on the back burner for the time being. And some enhanced CPP benefits. The promise has been that within the next couple of months they're going to sit down and talk to the provinces about revamping that and making that a little bit more viable, a little bit more enhanced.
What about the other end of the spectrum, those students?
Students, yeah, this is a good one. There's the student loans, and of course when you get out of school and you have high student loans and debt, what they're doing is allowing you now to not have to pay interest or your loan until you're gainfully employed and earning around $25,000. So this is going to be a good opportunity to get a little bit of a head start before you have that debt repayment on
For sure.
plate.
In terms of beyond the household budget,
Mm-hmm.
the city is really anticipating an injection here in terms of capital spending. What's key on your list in terms of that?
I see that they're going to be supporting the transit, the new green line, infrastructure support. So maybe some more jobs on the horizon there.
Coming at a much needed time.
Yes, yes.
Wiley, it's a pleasure as always.
Okay,
Thank you. She's here every Wednesday talking about your money.